It is down to the wire in the race to Capitol Hill. Here on In the Loop, we are asking some of the nation's top business leaders and investors what they want from the next Congress. And today we're talking to two technology venture capitalists. Andrew Zalasin is the CFO of RRE Ventures and also partner there, and Bob Rice is the managing partner of Tangent Capital Partners. Both of these gentlemen, of course, funding all these new startups that are coming up in this country. So that's where I kind of want to start. You know, with small businesses, what's going to change for them after the elections?
Frankly, I fear that not very much at all is going to change for them, because the dynamics in Washington right now are so poisonous that the primary output from Washington is simply uncertainty for the business community across the board.
Right.
Yeah, so we see new companies being started today, maybe more so than even 2, 3, and 4 years ago.
New companies today.
New companies today. The opportunity is there today. The environment is still good, despite the attempts by Congress to try to layer on additional regulation and taxes for folks who put the kind of capital for startups like us, venture capitalists, and also angel investors.
But what's good about the environment, though? I mean, you know, we just outlined taxes could go up, right? Regulations could be even harder. I mean, what's good about the environment, though?
Well, in my world, in the technology world, what you have is companies who are being innovative. They're providing things that help companies go faster, stronger, and better at lower cost. And when you have those opportunities, you have big companies and small companies who seek out these kind of technologies, these innovative new markets and new technologies.
And what that really points out is that the whole country has to be more involved with creating an entrepreneurial culture. This is the competitive advantage of the United States of America, and it is what's going to pull us out of this thing over time, frankly, if Congress lets us.
Right. Well, and it's also going to create jobs, right?
I mean, absolutely. The net new job creation of the last 30 years has nearly all come from new companies that are less than 5 years old.
Okay.
And so when you're looking at a period of high systemic unemployment, and you're looking at that kind of job engine creation, you know that this is the kind of thing that we have to get more seriously behind and push harder on to make happen.
And yet you've got like the Fed today, where we're talking all about quantitative easing and the Fed trying to get us out of this liquidity trap that we seem to be in. For small businesses, you know, we keep talking about big businesses and where's the demand. For small businesses, where is it?
Well, small businesses are the backbone of this country. More than 50% of people employed in the United States are employed by small businesses. And as well, I think 70% of jobs and new jobs created in the last 10 years were from small businesses. So they are really the backbone. Those are the folks from the mom and pop stores on Main Street who suffer in these kinds of economies because people don't have the capital to come and buy goods and services. Those are the folks who are in most distress right now.
That's right. And the big thing about the Fed, this is all very macro. I mean, yes. Honestly, it just doesn't have a lot of impact down at the startup level. What we need at the startup level is more incentives for people like us and the rest of the angel world. I mean, there are lots and lots, 250,000 angel investors in the United States, to take equity capital and inject it into these businesses. These businesses are not going to get started because a bank makes a loan. That doesn't happen anymore. The equity capital has to come out of the small investors, the angel investors, the venture capital firms.
But do you yourself hesitate because of the environment? Like, you know what I mean? The macro environment, does that make you hesitate at all?
I don't. I think for people like us, it doesn't make us hesitate. And the reason is that change is happening, whether Congress likes it or not, whether anybody likes it or not. Technology change is happening very, very rapidly, and it creates opportunities.
Okay. All right. We're back with our panel on the elections, this time with technology venture capitalist Andrew Zalasin, the CFO of RRE Ventures, and Bob Rice next to me here, the managing partner of Tangent Capital Partners. And maybe, Andrew, I'll start off with you this time around. You know, we were just talking in the break about what drives you nuts about regulation or about what's going on in Washington. Tell me what drives you nuts as a venture capitalist.
Well, the attempts by Congress to layer on additional regulation and taxes for folks who are adding money into the system to help companies start and grow, like venture capitalists and angel investors, is a bit maddening. Because, you know, over the last couple of years when the economy has been poor, we've put money into the system. We've created new companies, created jobs. New York, which is a center for Fortune 500,
right,
and also for major industries like publishing and advertising, financial services, folks like that, we are starting companies and growing companies. In fact, I think in the last 10 years, we've started 40 companies. We've created over 2,000 jobs and $1 billion in revenue. We want to continue to fuel that engine and make those investments.
Have any of those been scuppered or been hampered by regulation?
Well,
by government?
We worry about the opportunity for the government to then again layer on more regulation and taxes and provide a disincentive and to discourage more capital to go into that. We're with these companies, as we were talking before, for 3, 5, and 10 years.
Right.
We are real partners here. And to the extent that we're taxed at ordinary income rates and not given the benefit or the recognition and encouragement to make these investments, that's a big disincentive.
Okay, what about you? What drives you crazy?
What drives me crazy more than anything else is that two parties are fighting each other much more than they're creating constructive policy. My perfect example is this crazy new requirement that all businesses are going to have to report every business-to-business expenditure of over $600. This is a crushing burden for small businesses and startups. It really is. If you've got a 2 or 3 person shop, whose job is that going to be?
Your costs go up exponentially.
Now, both parties recognize this is a bad thing. They agree on that, but neither one of them will agree to fix it because neither one wants to give the other a legislative victory. Where are the priorities here?
Then do you wish, though, that then technology companies had a bigger lobby in Washington? I mean, is there some sense of that at all?
Absolutely. Frankly, we almost got really clipped with this financial regulation bill last year.
What do you mean?
This year, well, because they almost imposed brand new restrictions that would have been crippling on angel investors. They wanted to change the definition of what a qualified investor was to a level that would have eliminated most of the active angel investors from being able to participate in capital formation for small businesses. It was insane. But of course, the point was they wanted to protect investors from things like the Madoff scandal. So as usual, we overregulate in response to a problem and create brand new problems. Fortunately, we dodged that bullet, we think. But the real problem here now is that nobody really knows what the rules are going to be because Congress simply kicks the can down the road to the regulators. We don't know what those regulations are going to look like.
For you, Andrew, I know you're nodding your head.
Yes, I mean, I'm encouraged, actually, by what I hear from the campaign trail, and whether it's Republicans or Democrats, independents or other.
Now, you're encouraged, but Bob's scared.
No, I'm encouraged because I think the reaction that we're seeing is that politicians are understanding what the issues are. They want to help this economy grow. And whether it's folks from, and I'll name names like, Scott Murphy here in New York, or folks like Gina Raimondo, who is a venture capitalist who's running for treasurer in Rhode Island, or the CFO of Florida, who was an angel investor at one point. Those are folks like Alex Sink that are, mindful of the challenges and what we need to do to help build this company. They understand small businesses, they understand serial entrepreneurs, and they understand what needs to be done.
Right. This is a continuing problem, though. I mean, do you expect any of that to change, though, after the elections? I mean, do you expect them, do you expect more attention paid?
I would say, again, what I am primarily worried about is a poisonous dynamic that it gets the two parties more pointed at each other than pointed towards creating constructive policy.
Okay, gentlemen, I'm going to have to end it here, but thank you so much. I really appreciate it. Appreciate you for joining us. I was Andrew Zalasin and also Bob Rice. Thanks so much for stopping by for this discussion.